Today we're looking at Mahsing Group. RHB Research is keeping its buy call on the counter but trimming its target price from RM1.22 to RM1.02, citing the impact of the lockdown on third quarter earnings. The stock closed at 80.5 cents yesterday. So the bad news is that the lockdown meant minor interruptions in Mahsing's glove plant. In view of the delay in shipments, RHB Research expects earnings contribution from the gloves segment to be minimal in June, though it should be substantially stronger in the second half of the year. Meanwhile, lower average selling prices or ASPs for nitrile gloves are to be expected, based on guidance provided by the bigger players. The prolonged lockdown is also affecting Mahsing's construction progress and billings. RHB cut its FY21 to 22 earnings forecasts by 15 to 20% and described a lower PE of 5 times for the gloves business. That's in line with sector average after the recent sector derating. Now, the good news is that despite the lockdown, RHB says the company's property sales remain on track and believes it will still achieve its 1.6 billion ringgit sales target. For the first 5 months, Mahsing has already registered 650.5 million ringgit in sales, and there's still about over 500 million ringgit worth of bookings to be converted. RHB says sales should be relatively decent since the transactions and stamping can be done online. Mahsing still plans to launch M Senyum in Sepang and M Astra in Setapa in the fourth quarter of this year, which will likely help in contributing to sales. So what's the consensus? According to Bursa Marketplace, there are 9 buys, 3 holds and 1 sell on the counter. Average target price RM1.07 versus Mahsing's last close of 80.5 cents. That implies a potential upside of almost 33%.